Coke or Pepsi? These two companies have dominated the soft drinks industry for over a century. Coca Cola was founded in 1892, whereas Pepsi was incorporated 6 years later in 1898. Both companies have competed for the top spot ever since. A famous example of that competition is the Pepsi Challenge, which Pepsi started in 1975. Both companies have actually attacked each other so much in advertising that some argue they have shaped modern marketing. Even though Coke was the undisputed winner at first, it's hard to say that today. Pepsi is the brand with a better global social media exposure and better consumer sentiment. However, Coke has the bigger reach. So, which company is the better investment choice? We all know that Warren Buffett invested in Coke during the 80s and has made billions from his investment. To this day, Coke continues to be a big position for Buffett, currently standing at number 4, making up almost 7% of his portfolio. Would you imitate Buffett and buy Coke? Or would you choose Pepsi instead? Historically, Pepsi's total return has been higher than Coca-Cola's. That's been the case in the last 30 years, the last 10 years, the last 5 years, 3 years, 1 year, even year to date. Does this mean Pepsi is the better choice, or was Coke just unlucky? Let's take a look at the latest earnings. At the end of July, Coca-Cola beat earnings estimates by 8.3% and revenue estimates by 2%, while growing 6.2% from the year before. For the financial year, Coke expected revenue growth of about 8 to 9%, with earnings increasing about 9 to 11%. They also expect a solid free cash flow of about $9.5 million, compared to the $7.8 billion they had last year. Meanwhile, Pepsi beat earnings estimates by 6.6% and revenue estimates by 2.7%, while showing a revenue increase of 10.3% as compared to last year. They now expect a 10% growth in revenue and a 10% increase in core EPS, 15 cents above the consensus. Despite the good news, Pepsi's stock did not move a lot and is actually down almost 5% since then. Pepsi did a bit better in their recent earnings than Coke, but what about the fundamentals and the valuation? Both companies are on the expensive side. Coke has a slightly lower forward non-GAAP PE of 22, whereas Pepsi stands at 24. However, Pepsi has better growth expectations, putting their PEG at 3, whereas Coke stands at 3.4. Coke has a higher price to sales ratio of 5.6 compared to 2.7 for Pepsi, but then Pepsi has a higher book value of 13 compared to Coke's 9.6. The small difference in the valuation comes down to profitability and growth expectations. Coke has really high net and free cash flow margins. Just look at these. A+ across the board. In comparison, Pepsi's net and free cash flow margins are nearly 3 to 4 times lower than Coke's. Pepsi's margins are also less stable. Here we can see that they're actually below the 5-year average for Pepsi. Coke's margins, on the other hand, are roughly the same or even higher than their 5-year average. To me, that's a big plus, and I think it's a big part of why investors like Coca-Cola. Stability is key, and people pay a hefty premium for that. I should mention that both Pepsi on the left and Coke on the right have an amazing return on equity. Coke does have a slightly better return on total assets than Pepsi, but the main thing here is that both companies are really efficient when it comes to using their capital to turn a profit. The capital structure of Pepsi and Coke is extremely similar in terms of market cap and debt. Can you even guess which one is which? They're almost identical. The only difference here is that Coke has double the cash of Pepsi. However, Pepsi on the right here pays a higher interest than Coke, with nearly $600 million in net interest expense versus Coke's $400 million. This puts Coke in a better light, although honestly the difference is not that big. Their earnings before taxes and interest are almost identical at $12.6 billion each, and that covers the interest more than 20 times over, so it's nothing to worry about. The financials are safe and secure. Since that's the case, let's look at how Pepsi and Coke return value to shareholders. Now, Pepsi has been a lot more active with share repurchases. You can see the steady trend here over the last 10 years. Pepsi's outstanding shares went down from about 1.53 billion to 1.38 billion right now, a reduction of 10% or 1% every single year. In comparison, Coke only bought back 2.2% of their shares over the last 10 years. Their share count was 4.42 billion in 2013 and is currently just 4.32 billion. In fact, we can see that their shares started going up over the last 5 years. Buying back shares is linked to a growth in share price, and this could explain why Pepsi's stock price has been doing better than Coke. Coke does have a better dividend of 3.2%. Even though the 5-year growth rate is only 3.4%, Coca-Cola has been increasing it every single year since 1963. The payout ratio is a bit high at 70%, and that's not great. We can see that Seeking Alpha has given Coca-Cola a D and D- on the payout ratio. However, Coke is financially stable. Their earnings are also meant to grow by around 10%, so I think the dividend is safe and can keep growing. I don't see any issues, although Coke should really focus more on share buybacks. One of the side benefits there is that the total dividend payments get reduced that way, because there's just less shares to pay dividends on. This also allows the company to grow its dividend faster. That's exactly what we see with Pepsi. Pepsi has a lower dividend yield of 2.8%, that's true, but the growth rate is 2 times higher than Coke's at 6.9%. Pepsi has also increased dividends for 50 years, so they have officially joined the American Dividend Kings list. Pepsi's payout ratio is relatively high at 65%, just 5% less than Coca-Cola. However, I don't think the dividend or the growth rate is threatened as Pepsi is financially stable and is growing earnings at close to 10%. At this point, guys, I have to tell you that I did not expect Pepsi and Coca-Cola to be this similar. I knew they would be close, but they're almost identical. The main difference I see here is that Coca-Cola has higher, more stable margins, whereas Pepsi is growing a bit faster, it's raising dividends more and is buying back more shares. This tells me that Coca-Cola would be a better pick in a bear market, whereas Pepsi should do better in a bull market. The final comparison I'm going to make is a quick technical analysis. I think Pepsi wins here by a large margin. You can see the steady bullish trend in Pepsi's price over the last 5 years. They have dropped in the last 4 months, but the 100-day simple moving average has been a good level of support for the stock price. It was retested in the first week of September, and so far Pepsi hasn't closed below it. I think that's a good sign. In comparison, Coke hasn't been doing too well. It's down 10% since May and is actually trading below its pre-pandemic levels of $60. Unlike Pepsi, there is no clear established bullish trend. Coca-Cola's price peaked in May 2022. Since then, we've seen this wedge formation form. To me, it looks like Coca-Cola's price is heading down for the 200-day simple moving average at $56. If it breaks it, then the next stop is $54, and so on. Let's look at some price targets. My personal valuation models put Coca-Cola's fair price at somewhere between $61.2 and $63.6, with the exception of the Gordon Growth model, which puts it at $50. Given the current price of $58, that's somewhere between a 5.6 and 10% potential upside. The Wall Street consensus for the price of Coca-Cola is $69.7 and a 20.3% upside, so clearly they're more optimistic than me. On the high side they see $76 and on the low side they see $60. Basically, they don't see Coca-Cola's price going down, but the upside is also not that big. On the other hand, my models put Pepsi somewhere between $127 and $196, with the Gordon Growth model looking too optimistic at $222. That's a massive difference, and the reason behind that is Pepsi's free cash flow. Even though Pepsi grows faster than Coca-Cola, their free cash flow is half as big. That's why the discounted cash flow model ends up with such a low fair value for Pepsi, almost 30% below the current price. Value investing is all about buying at a discount, so I can say that Pepsi is really trading at a good price right now. Wall Street disagrees with me and puts a target price of $197.5 on Pepsi, with a 10% upside. On the low side, they see $156, which is closer to my valuation, and on the high side, they see $220, like the Gordon Growth model. Now, what's the verdict here? To me, it looks like the market is more optimistic about Pepsi than Coke. This could be because of the higher growth rates, better dividend growth, the earnings beat, or simply because share buybacks add up. There is no question that Pepsi has a better momentum than Coke. While Pepsi looks like the better technical buy, it looks overvalued from a fundamental standpoint. Coke looks like a much better buy in terms of valuation. However, if I have to be honest, neither of these offers much in the way of margin of safety. I mean, both of these companies have a forward PE that resembles Google, but neither of these have the growth opportunities that Google has. I'm not saying that you should be comparing Google, Pepsi and Coca-Cola because they're obviously extremely different. However, it is obvious that Coca-Cola and Pepsi have a massive safety premium attached to them, and that limits your potential profit. Plus, the current 2.8 or 3% dividend yield is nothing to be excited about. You could make a case for Pepsi given their dividend growth rate, but the price makes me think twice. I personally don't have any positions in either of these, and I don't think I'll be buying soon, unless they somehow drop by 20%. What do you think? Are you a fan of Coca-Cola or Pepsi? Are you buying right now? Let me know in the comments below and leave a like if you like the research. Thanks for watching, and I'll see you again soon.